You know, so many people, they're talking about $100 crude coming through. Is that bet still on? Because you look at the action that we've seen in terms of the prices of late, and the China reopening, it doesn't seem to have moved the needle all that much.
Well, I don't know about that. One of the big concerns as the year flipped over to the new year was refining margins, particularly in Asia, particularly if China was exporting a lot more oil products. And in fact, what we're seeing is good strength with global refining margins across the board. As you know, oil demand data is very poor. We don't really know where all the oil goes. But what I've always said is, if you want to know what demand's doing, just look at refining margins. And refining margins globally are strong. So the market looks in pretty good shape. Additionally, as you know, this time of year is a tough one for markets in general. And we generally look for oil prices to rally into US driving season, which would be late May, really. So, don't panic in late January. We're okay.
Paul, do you mind if we move to the situation in Europe now, which is, in my mind, quite interesting, especially in the gas market? So, we saw them stockpile a lot of gas leading into the winter, and it seems like a mild winter. And now some analysts that I've read are saying that they've got enough gas to last them not only this winter, but next winter. How much stock do you put to that kind of view, and how do you see that developing over the next year, especially on the gas prices within the European market?
Yeah, I mean, it's incredible because actually what's been tough in oil markets, further to the bearish side of oil markets, is that Russian oil supply really hasn't been interrupted. They've sustained exports at high levels. In fact, I had it from a great source that the Saudis have been asking around as to, how come Russian oil is still flowing? And that brings the question of what happens with the sanctions coming up on products, because it just doesn't seem to work. But having said that, on gas, Russian supply into Europe's down 90%. It's a collapse in supply because obviously you can't move the pipelines. And at the same time, exactly as you say, inventories of natural gas are very high, way above the targets, actually above the historic range. So that clearly implies one balancing item, which is that demand must be very low. Obviously, if supply has collapsed, inventories are high, the balancing item becomes demand. And it's clear that there's been a very major effort across Europe to exceed the target to reduce demand by 15%, which was the target. It looks more like demand is down 20%. So then the question becomes, is Europe really able to sustain such low demand levels? Or will we see a recovery in demand and maybe the inventory picture doesn't look so good? And for that, we'll have to see. What's clear is you still have a major outage in Russian gas supply, and that's going to keep European markets ultimately tight. The balancing final item on the demand side, obviously, is it's been extremely warm, record warmth in Europe that has really collapsed prices. And that's why they're so weak at the moment as much as anything. So I think there could still be a problem next winter.
Indeed.
But it'll tend to depend on what the weather does.